The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, I just couldn't help it. So we've got the 1 minute chart of the E-mini. I just wanted to show you this here because sometimes patterns become very obvious without any technicals at all. Look at this, peak A, B, C, and what do you want to get to? Always the D is the requisite requirement for a buy signal to buy mode. And then there could be a pullback. Well, there is a pullback. This is a 1 minute chart of the E-mini. Look at this. Look at the I would say, velocity. I don't think that applies here exactly. I think it is. I guess there's a difference between velocity and momentum. I'm looking at this more as a combination. Verbosity, the two together. Look at the way this has gone to a new leg B in the 1 minute chart. But what, even more important, is it even possible that this is a leg A in the 10-minute chart of the E-mini, and that we broke into a new intraday high? Therefore, this is an A, and we're still looking to go to a B and a C and a D in the 10-minute chart. Wow. I mean, look at this, 200-period moving average. Look at that beautiful support. Look at the way now, this is the first time since you came down, since 6 o'clock this morning, that the 10-minute E-mini is actually flipping. Well, we've got to wait for a full 10 minutes. We've got another 3 minutes to go with a green 9-period moving average flashing. I mean, that would be really good. All right, let's get back to the story. And the story is that the Dow right now is trading up 273 at 49,805. I think if we can tag the 50,000 level again, that's going to be very important. Why? Because look at this. We spoke about this in great detail. My video that I did for subscribers on Friday afternoon, I said, this is a volatility index going to a seldom before seen level in the 23s. And yet there's no real bad news. It's just this emotional stuff that's coming out over the wires, but there isn't really anything. That just says that we've got tremendous support for any pullback in the market, in the general, all the sectors. So this is what you can see. 23.10 was the high of the 5th of Feb, and the high just yesterday was 22.80, well, 22.96. All right, so we just put it in light gray, 22. And look at this. In headings, I could have regional banks, rates, Japan, tariffs. I mean, you could just. There was nothing to say on the 5th of Feb. I had to say tech week with a question mark, and then for yesterday, I didn't know what to say. What was I supposed to call it? What was it? It was just nervousness, general nervousness, but no real reason. So I'm just watching this and saying, good, okay, that just tells you that it's giving us a cushion. Doesn't tell you can go to all-time highs. It does say that one aspect is at least you can just talk about it as if it's in the focus, and the result and the reaction is kind of what you expect, so that's good. So we're getting a pullback down $1.24 in the VIX index at 19.04, and just as yet, as I'm talking, there isn't really anything socially or geopolitically or economically or metallically out there to really make you nervous. All right, let's just go back. We want to look at this now for a now, so this is now during the show. I did the update. I've been so busy this morning that I'm kind of... Okay, here we go. Let me just do this real quickly. So the Dow, INDU, there we go. The Dow is trading very nicely up towards the high of the day, up 278 at 49,807. The S&P, now I want you to talk about this in terms of the weekly chart. Over and over and over and over for weeks and weeks, I've been talking about this dash, this little mini inside track propellant zone, the one that is like the magnet, the attractor. And because for the third week, it's held so nicely, getting to the pink line. I'm just watching this and saying, if by Friday there is any chance that we can break above the green line as we did last week, but we couldn't hold above it, I think that'll be really positive for the general market. Now, I didn't want to talk about it yet, but it is halfway through it is just over halfway through the month, so I need to talk about it. This single leg A from the April low of last year, look at this, every single month has had a higher high. Well, I have to consider that this is a leg A, and it's just a very methodical one. I never anticipated that we'd go all the way through February with an all-time high as the candle high of this month, but we have. So I'm watching this very closely. Why? Because how we resolve anything in March is going to be very important. April, it's only 11 months, 10 months, higher highs and higher lows every single month. Amazing. All right. With that said, we put the hex we used to call it, on the market, and let's just see what the S&P is doing. SPX.X, there we go. S&P right now is trading up 47 at 68.90. Now look at this. Remember the Dow had a green 9-period moving average. Let me just show you again. This is the daily chart, INDU. A green, and we pulled back, but the 9-period moving average held like a rock. And now look at this. The S&P, other way around. It's pulled back, and it's going to take a lot for that pink 9-period moving average to go green. The weekly chart is arched over at a peak D. It's not fading, but it is arching over a little bit in that rectangle formation. Let me just extend that rectangle. So I don't want to take too much time now because I've got so many questions. But I did want to say that the S&P, it's a work in progress. The support so far has been very good. 68, I would say 68.40 to 68.25 is this week's key support level. The resistance is deep into this candle, and I'm going to just say that to get into the 69s would be really important. 69.08 would be really nice action this week, anytime this week. Now, the QQQ is a little different. Look at this. It's arched way over peak D top, a sell mode in the daily chart, weekly chart, just still very good. Arching over, but hey, the 9's over the 14, but 68.50, 638.60 is the high that was made. I should have put the date. I think that was the end of January. Yes, January 28th, and we're watching that very closely because it means on a monthly basis, we are in leg B with a potential to make, put that back. Okay, 60. Yeah, so that's 128. Let me just put that in, 128. 26. All right. So as I'm looking at it right now, the QQQ has more than the S&P to make up. And the daily chart is still not that great. Weekly chart is arching over, but the tacticals, my main tactical, the 914 is doing well. Hey, what about the IWM? IWM right now is trading really nicely. That's a small cap. So the down, the small caps, in a way, are the kind of leaders right now. So you go all the way from the Dow 30, the very select group, the elitist group, to the iShares, the very broad 2000 ETF. This is good action. I like that broadening out there. Let's just quickly go to the SMH as we go to the break. SMHs are up now at the high of the day, 440.62.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Back. So you remember what I was saying? I said there's a really good chance that just this simple technique of counting the peaks, A, B, C, D, expecting at least D, 4 higher peaks in a bicycle to buy mode, then you could get a restart and get another A, B, C. Look, there it is. See, we're waiting for the D. I mean, I haven't used Fibonacci. I haven't used. There's nothing. There's just. I don't even need candles. Actually, I could just have a single bar because I'm only looking at the low and the high of each bar. That's the only thing I count. I use the candles because it's just. First of all, it spaces it out very nicely, number one. And number two is I'm just so used to seeing it. And there's a lot of information in the candles. So, all right. So I just wanted to mention that sometimes you can make things as simple as you want. And I'm just going to go on now to this back here. So questions came in. I do want to just finish up here. So the SMH is really important. The semiconductors move higher. I like the fact that they're moving higher because it confirms for me generally where the semis go, the general market is going to go. Okay, so that's good. So I can start to get rid of this. I always like to put at least 2 patterns in that I'm following. So the semiconductors are more the V-shaped pattern. It's more a cup and a handle, a particular formation that we're looking at. Get rid of this, out. And the weekly chart is still very strong. I've got this as a B, but if it goes to 420.61, I'm going to call that a new leg C in the weekly chart and only a leg B in the monthly chart. Good. Now, real quickly, we were looking at the Dow, so let's just include this. Walmart question came in. Could I look at Walmart? What's the question itself? Walmart. You have the March 130 calls. March 130 calls. All right, so let me just update this. I've got the other parts updated, but let me just go. Here's the daily chart from the low of around about the 10th or so of January. You got a low and it goes peak A. Very simple technique, nothing to it. Tell that to my AI program. I've spent 6 weeks night and day, and it hasn't yet given me my first A. But that's because there are other things going on, and I am still doing it with the old trade station, 30 years old. So of course it's a problem. I could move it to the new one, but then all these notations, thousands and thousands of charts that I've done by hand. Every single chart you ever see that has any lettering on it, that's me. So I would lose that. That would be a terrible shame. So I've decided I'll go with the old one, and I'll just wait. It'll get there, I know, but there are a lot of things. There's a lot of ifs this and ands that. So this is F. This is G/C. My leaning right now is to think that the monthly chart is in C. So what's the question about Walmart? You've got it was an ugly candle yesterday. It makes a new all-time high at 130. Look, yesterday was what? Tuesday. So on Friday, it goes to 134.65. And then yesterday it goes to 134.69, 4 cents. And then it has a one of the most severe pullbacks in quite a while. And today it's finding some support down 48 at 108.37. So March, let me just check the calendar. So March would be the third Friday, the 20th. Oh, you've got a month. All right. With a month to go, let's just treat it as a work in progress. I like the 9 way over the 14. The MACD is turning down, but it's still positive. The retro strength is starting to weaken a little bit. Stochastic's good at 85%. On balance volume's good. Okay, so you have the 130. Oh, I love that you got the 130. If you said 132.50 or a little higher, let me just check. Yeah, 130. Okay, I think that you're going to do very well. Very well is based on what I'm looking at now, down 48 cents at 108.37. It did have a low today of 126.72. So if you don't mind, I'm just going to take a second to look at the 120. As I said, that was a very sharp pullback yesterday. So let me just do this. I could go to all my automated levels, but I don't want to do that. Okay, here we go. 130 is actually a target. 130.10 is the automated Chapman wave resistance that I've got right here. Now, the most important thing that I'm looking at is within the context, and I'm going to go to this right. Oh, I don't have it. I can't go there. So, yes, I tell you what, the reason why I'm taking my time, I could easily say to you, oh yeah, 131, you'll get your money back. You should do very nicely. That's not the point. The point is I'm looking to see at a peak E, potential peak. No, that's not an E. That was a holiday. So that's a D. At a potential leg D, is it going to be a deeper pullback? And the answer is, I at this point, if by the end of the day, now we've increased to minus 65, I don't want to see that. I want by the end of the day or by tomorrow, today's Wednesday, by Thursday at this time during my show, I want us to be into this candle. So I want us to be at 120. We're at 28.16. I'd like to be 120, 129.37. I'd like to be into the 129.30s, into that area. If that's the case, I feel very comfortable by either this week, by Friday afternoon, or next week, Tuesday, that you will have gone into the 132.70 area, 20 area, maybe 70. All right, going one step at a time. It's all dependent, very short term. In other words, I don't care. You've got a month to go. I'm just saying to you, absolutely, you're going to get your, as far as I can see, unless it's a really big slide under 125 in the next week, I think that you're looking good. And even then, you've still got a month to tag 131. 130 is not good enough because you want a premium. So I like it. Let's look at it again tomorrow. I like what you've got. I don't think I'd change it, but I think you're okay. And you'll be way more than okay. The reason why I'm taking time is what I wanted to tell you, that if you get, let's just say you double your the option, you double. I don't know how many you've got. But if you can take one with a double and then have a cushion, and then I'd use the cushion as the actual price, not the option price, but your price of Walmart, I think you will do very well, because I think you can retag the high, the 134 area. 134 means now you're really doing well. So let's just go one step at a time. I like what you're doing. I would rather have it right now towards the 128, 30, 40 area, just go into the high 128s, and then I'll feel more comfortable at the close. I don't want the close to be weak with Walmart as part of what we're looking at in the general market, looking very good. Walmart takes a breather right now. I prefer that it holds well. Okay, next question came in. Could I look at, yes, mid-caps, very strong, MDY. So the MDY is the mid-caps. That's the real mid-caps. MDY, it was doing beautifully the other day. Yep, it went to a peak B, and I think it's going to go to a C. So this is a little bit like Walmart pull back there. I want to see this over the next 2 days or so, that it gets right back there and it goes to a higher high than 662.60, which is the high of the 12th. And it does look like it's going to go leg C. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, MDY, the support is at C, 652. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Hi, folks. So let me finish up. S&P mid-cap depository receipts trading at 658.59, up 683 right now. The moment it goes above 662.60 by 1 penny, it either, if it's this week before Friday at 4 o'clock, if it does that, that's already bullish because that extends leg C. If it does it next week, that's already getting to a D. I'd prefer if it was in leg C this week, and that's what it looks like it's going to do. The next question, and what I was saying before, that the support is right there at the 9-period moving average of 650.60, and then the black 14-period moving average of 646.99. So far, it's actually doing very nicely. Then the questioner also wondering about HIMS, that's hims and hers. Wow. HIMS and hers, a little deflated there at 16.20, down 7 cents below the 200-period exponential moving average. I've had a terrible problem with this one, A, B, C, D, and went to an E and an F, all-time high at 72.98, with a round number low that month, February of 2025, exactly a year ago. And ever since then, it's just been really acting very poorly. So the question is, when do I think it'll be basing? You see this little rectangle right here, excuse me. If it takes out 15, that's a big problem because now you've got this entire resistance all the way to 1650. But if any time this week, it just sneaks its head, just pops up into the 1734 area. It's at 1620 right now. That'll at least say, you know what, now that the MACD can start to see the histogram improve because it hasn't up until now. Stochastic is flat at 3%. What do I say when the stochastic's flat at 97%? I said, if you're bullish, you don't want anything more than that. It is the best you could ever have. You've got a stochastic holding in the upper 90% area. That is exactly what you want. Switch it around. If you're a bear, what do you want? You want at 3%, you want it to hold at 3% as long as possible because that's very bearish. So at this particular point, I see nothing. It's going to be a news event that both triggers a rally and then supports the rally. I don't want just a one-off. No, I don't see anything yet. Next question. Sorry about that. Next question came in. Let's just see where we're going here. Did that. So ONDS or open. So two questions came in at exactly the same time. One was in the Tiger YouTube and one in the den, so ONDS. Yeah, now it's looking a little better. You remember I said it's all very well going in a rectangle formation, but you want to see the histogram of the MACD start to improve. You want to see the relative strength improve. You want to see the stochastic, which is flat and under 20%, go over 25% to 32%. It's at 25 right now. The on-balance volume, the blue line, is just jockeying around, just up and down and up and down. But look at the 9-period moving average. It has a long way to go to become powerful. So this is the disappointment because you want it to go green, but it'll only go green at about 11:40. And here it is at 10:48. So it's got a point to go. But correct. Very good observation. Leg B. Finally, you got yourself a leg B with a little distance to say, I've already tested successfully the arch formation. I didn't take out the left side low. Instead, I'm moving to the upside. So now it's a good sign. It's only a good sign. Ondas Holdings, private wireless data and autonomous drone solutions for industry and government. Look at this. It's at 10.51, up 45 cents. Big deal. It's up 4.5%. That's nice. So this is what I'm going to... Remember, we were talking about this, and I think that at least one of you started a little nibble back in the, what was it, $9.70 or $9.62. So with that said, what I'm going to say is, this is a work in progress. It needs a lot to be able to be successful. Why? Because it's got to go and trade above that high of the 3rd of Feb of 1142. And that's a point away. That's a long way away. So I'm just saying it's a work in progress if you want to get in. But The weekly chart still it's positive, but it needs a lot of work in the technicals to be able to regain strength, and it'll only do that if we can get to 1140, 1180. So yes, you've got it. Keep your stop fairly tight. Would I initiate a new position in Ondas? I'd say I do it. Because it's already in the mid-10s rather than the mid-9s, I would make it a smaller position because I've already lost that the little bit of leeway. So yes, I would at $10.57, I'd start a small position. I'm not expecting anything much until it starts to trade in the 1126. Just tag 1126 once, not good enough. Then it must go into the 1150s. Once it goes into this arch formation, successful test that makes a cup formation, I'll be very happy. But it's got a lot of work to be done. Okay, it needs quite a bit. And open. Have I got that all notated like I had once before? OPEN. I don't know if I've still got it. Yes, make a peak be a minus just under 8 about a month or so ago. And here it is at $4.68. Good candle today. Oh, Open Door Tech. Open. You remember, this is the one that in August. And Tanglewood, I said I saw the license plate of this car open, but it wasn't a fancy car, so I couldn't understand if this was the CEO of Open Door Tech. Anyway, it's a digital platform for real estate, buying, selling homes. I think that this right here at $4.60, it needs a lot. But you know what? This one, like Ondas has already proved itself to at least have gone through the first stage of finding a base. This is not even doing HIMS hasn't made the base at all. If this didn't have this candle today up 8.2%, up 36 cents at 469, I just ignore it. But just for fun, if you want to have a 30-cent stop, it's 8%. So don't get carried away. It's just a small percent. Why? Because this right here, with the rates at least coming down a little bit, I'm going to say, as a gamble, that's all. Take a 469, but definitely I would consider adding to it, but I'd use time. I'd have a little position today, and if the stop, I'd have a stop of 468. Yeah, I wouldn't want to have a 447. That's a little bit wide, but just for the moment, say 447. Every 3 cents that it rises, I'd have a trading stop of 3 cents to move it, right? And then another one in Tuesday or Wednesday a week. If it's actually held, it hasn't taken out the low of yesterday, which was at $4.26, and it actually tries to tag 489 even just once, I'd say, gee, this is the first time that it's showing some strength that has the possibility of a bounce, at least a nice percentage bounce. I'll be back in a moment. Dow is trading up 317, S&P's up 53. Basil Chapman, Tiger Technicians Hour.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn. and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Walmart, a member of the index and the Kickoff since January 20. So what's happened? Let me just do this. The question came in about Rhodes Properties, MRP, trading at 31.64, up 10 cents. It's doing very nicely, but I don't see it yet breaking to the upside in the cup formation. It's at 31.64. If it can break above this high of yesterday, it's good, which is at 32. Not good enough. I have to say that by Friday, so this is Wednesday, 2.5 days. That's what I want. Within 2.5 days, if it can hit the top of the candle of the 13th, which was at 30, it's being covered up. High, 32.25, 32.26. If it can go into the 32.30s, that would be really important because it will say that there is a chance that this is a Chapman wave instant restart right there. But it has to happen quickly. If it takes a little too much time, then you have to just treat this as a brand new move to the upside and it's re-energizing. Stochastic's not at 80%, it's at 74, but the MACDs are good. The retro strength is pretty good. So this is, I think, a REIT. I'm guessing, but that looks like a REIT. I like it. I'm not going to say to you, get out. I'm just going to say, let it tell you, because if it slides under 31, it's at 31.54. That's not a big deal. If it slides at 31.64, if it slides under 31, right now in this phase, it's going to say, you know what, I'm going to take a little bit longer. But if it's able to hold and move to the high of the day, which is at 31.84, which is another 20 cents, that is the action that you want to see. Just steady, very quietly moving higher. But as it stands, yes, it's starting to build a cup formation. Now, you remember on dust, we were looking at that, and it went to a leg B. So the questioner said, does that mean it's going to go to a D? Remember, we go one step at a time. You can't get to D unless you get to C. So we haven't got to C, and that's exactly the same thing here with Rhodes Properties. It's gone to leg B. It's acting well. The 9-period moving average, for the first time in a little while, in about a month, more than a month, has actually crossed net positive, but the week is young. It's still got to go Friday at 4 o'clock. If this can hold green, then I'm going to say to you, good. It's moving in a cup formation, and the next level that I'd be looking at would be this high. Oh, that's a little bit too high. But let's just give you the number, 33.49. 33 for it's a long way to go. But that's the high of the week of the 24th of October. Hope that helps you. Next question came in, and that is... I want you to go back to Walmart just for a second. Look, Walmart... This is a very strong leg C. in the weekly chart. Yes, it's a peak D, and now it's down 74 cents. It's increased by about 10 cents from where we were. But we're talking about a month to go for your options. I'm not worried about that. What I am worried about is the questioner said, hey, that means that there could be a G and not a G/C in the monthly chart. And I'm going to suggest that this instant restart right here, from my experience over the last 3 to 4 years with these patterns, monthly charts make an instant restart, and then you look back 2 years later, and all of a sudden you say, well, you know what? I need to consider that this is a brand new E/A, F/B, and a G/C, which should go to a D. I think this is still going higher, Walmart. I hope that helps you. I'm not talking about right now. I'm talking about over the coming month or two. All right. Next question came in, and we've got, whoops. Thank you. Yep. My pleasure. Okay. Question. So the glory IBRX. There we go. Yep. Immunity Bio Inc. It's an oncology stock. So look, remember I said that peak E. Now underneath it, we've got a rectangle formation. Therefore, I have to count each peak underneath it. Do I hear the music? I hope not, because this is really important. So this has gone peak A, peak B, peak C, and already a D, A, B, C, and there's your D, and it's underneath the rectangle high. So I have to monitor this very closely because it's worked very hard already to get to a D, but it's under the high that was made at $8 and what was that? $8.20 something cents. Yeah, $8.28 on the 22nd of Jan, and we've already had a high today of $7.70, and that weekly chart has improved a lot. So it's going to have to be some kind of orchestrated news that says every time it makes high, and a higher low, it's building up the pressure to pounce 1 penny above the high of the 22nd, 8.28 to go to 8.29 to start a leg D in the weekly chart. Very nice action. No complaints whatsoever. Just the struggle that it's had to get to this level makes me a little concerned, just like on a 2-day basis. So if today can close higher than the high of 770, that is really good. If it starts to pull back and goes to 702 or $7, says, oops, be careful. It could stall you just a little longer before it gets that high. Hope that helps you. That is Immunity Bio Inc. Oncology. It's funny, my screamer list, I had very few lately of the little ones, but I have got SB once again. SB came up right now as a screamer at $6.14. Safe bulkers. So the bulkers, the shippers are doing very nicely. Yeah, this is one I decided I wanted, and then I didn't get it. And there it is already at 6.13. Looks very good. All right, so where are we right now? Waiting for the music. So we go to NAT, which is Nordic American Tankers. Oh, my God. Going closer and closer to the high that we were targeting, and that is at $4.78, the high of November of 2020, $4.83, the high of October of 2023. What's today's high? $4.77. Unbelievable. Leg C in a beautiful cup formation, Nordic American Tankers. Almost on a daily list that I keep saying, oh, earnings come out on the 19th of Feb. That's going to be, hey, 19th of Feb, that's tomorrow. Oh, man, I should be blowing it away, I bet. I'll be back in a moment. Did I hear the music? No, I didn't hear the music. So they're good. So Nordic American Tankers earnings tomorrow. Next question, can we look at BE? Yeah, BE. I follow this every once in a while, but never have we owned it. BE is Bloom. I lost all my notation. All right, I think we've got a break coming up. It's doing very nicely today. It's up 8.98 at 154.30. Interesting. It is up 8.98, and some of the stocks we're looking at are $8.98. Fascinating, huh? All right, I'm going to do this real quickly. Bloom Energy, peak A. That's a B. C. D goes to an E. Remember, objective is to go from a buy signal upgrade to a buy mode, which takes you to at least a D. And then you got to see exactly what's happening. Yep, it's holding well. All right, so this is, oh, look at that weekly chart. This is a nice looking chart. Very good. Good eye. Who was that? Mellow Berry. Mary Belly Brew. Mellow Berry Blue. I'll be back in a moment. Basil Chapman, Dow's at 322, and the S&P's at 59.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Let me just finish this quickly. Look, here's this 1-minute chart. I said you don't need any technicals. You're anticipating higher highs to at least a peak D. Well, we went to the D, also went to an E. Now it's struggling a little bit. So this whole area, I'll just draw this in to say this is going to be an area with some kind of sort of midday, some kind of, there are just a little bit of a rest period. All right, so let's go back here. BE is Bloom Energy. Great. Looking up over 6% today, 9.25, trading at 154.49. I love this. This is the dreaded H pattern. H, so remember, these are patterns that I discuss in my webinars. And if it's successful and it becomes a cup formation, if we can close 2 out of 3 sessions above the arch high of peak A or B, in this case, 160, round number, but the next stage went to 160, round number, 2 round number highs. If it can close above 160 for 2 out of 3 sessions, it'll work its way all the way to this high of 170. 6.49. So, and that would be really important because that'll take you to a leg G/B in the weekly chart and saying, you know what, this is more likely a B. And the monthly chart is in very strong E. What happens if it takes out the lows at any point in the next week without the high of that arch, remember, above the arch for 2 out of 3 sessions? If it takes out 131 round number low, wow, this loves round numbers. If it closes on a 131, it's kind of stuck for a little while, but I like what I'm looking at. Good. Next question came in. We got that. Okay, next one. That is good, doing very, very well. Taseko earnings. Taseko earnings tonight. It should be very good because it's had, look at that, Taseko Mines, TGB, trading right now at $8.21, up 24 cents. So we'll see. Look, it's already had the big move, so maybe it's digesting the gains. But if Taseko Mines at 8.21, tomorrow, this time, is trading above 8.68, that'll be very good action. Hey, have a